You ever open your charts first thing in the morning, see that first big move, and just think, where in the world did that come from? It can feel completely random, right? Well, here's the thing. You're not alone in feeling that way. But what if I told you it's not random at all? Not even close. It's actually a continuous story, a global auction that's been running for hours before you've even had your first cup of coffee. This right here, this is one of the biggest mental shifts you can possibly make. Just think about it for a second. By the time you sit down to trade, entire stories have already played out. Positions have been built, risk has been passed from one continent to the next, and major expectations have already been priced in. Your trading day isn't the beginning of the story. No, it's just the next chapter in a book that's already being written. So, if the day doesn't start when your local market opens, where does it begin? Well, to answer that, we've got to stop thinking about the market as a single, isolated event. We need to start seeing it for what it really is, a global relay race. Yeah, a relay race. It's run by three main teams in three massive financial hubs, and each one passes the baton of risk and information, to the next. And trust me, once you understand this structured, logical flow, the market's behavior starts to make a whole lot more sense. And you can see that handoff perfectly in this image. This isn't just about different time zones, it's a continuous process, a living thing. Look at how risk and expectation are literally passed along, from Asia over to London, and then finally to the US. It's a 24-hour auction where the gavel, well, it never truly falls. Now, here's the really crucial part. Each leg of this race plays a very distinct role. You can think of it like this. Asia kicks things off by setting the initial conditioning. Then London, with all its institutional muscle, comes in and makes a decision about the direction. And finally, the US, with the deepest liquidity in the world, brings the resolution. Let's break down each one. Okay, so the race kicks off in the Asia session. This part is all about positioning and adjustment. The traders here are like the first responders. They're reacting to whatever happened at the end of the US day and setting the early tone. Now, the moves might seem smaller, maybe a little quieter, but don't be fooled. They are planting the crucial seeds of either momentum or tension that the next session is about to inherit. And then London grabs the baton. This is where the big players, the major institutions, really come to the table. And the first thing they do is start testing the story that developed overnight. They're basically asking, was that move in Asia for real? London's job is to reprice everything and expand on the early moves. This is often where the day's real, dominant trend truly kicks into gear. And finally, we have the anchor leg, the United States. The US session inherits everything, the good, the bad, the ugly, that's happened in the last 12+ hours. With the deepest pool of liquidity, it gets the final say. It can confirm the trend, completely reverse it, or just grind things to a halt. It delivers the final verdict and settles the day's risk. Just look at this timeline. It shows you just how seamless this whole flow really is. See those overlaps? Especially that critical handoff between London and the US, those moments are absolutely crucial. They are hotspots of high liquidity where the entire narrative of the day is either confirmed or aggressively challenged. It is quite literally a continuous conversation. All right, so we've covered the what and the when. Now let's get to the how. How do we actually read the story that's being told between these sessions? Well, it all comes down to understanding the critical difference between something called a gap and a dislocation. But before we get to that, we have to really nail down this core concept of inheritance. See, no trading session ever begins in a vacuum. It just doesn't happen. London inherits from Asia. The US inherits from both. And that first hour of trading, oh, it is everything. It's the market's live reaction, telling us in real time whether it accepts or rejects the prices and expectations that were just handed to it. Okay, so let's get really specific here. An open gap, that's pretty simple. It's just the price difference from yesterday's close to today's open. It's a snapshot, a single moment in time. A dislocation, though, that's much, much more meaningful. It's the total accumulated drift of the futures market overnight. It represents the sum of every expectation that was built up while the main market was asleep. And this visual makes it so clear. The gap on the left, that's just one event. But the dislocation on the right, that's the whole story of the night. So here's the key takeaway, the thing you really need to remember. A gap tells you what happened right at the open, but the dislocation tells you the size of the question the market is now being forced to answer. How much built-up pressure does it have to absorb? You know, understanding all this brings us to what I think is the most important part of this entire explainer. All this information, it's designed to do one thing, to help you shift your mindset away from being a retail speculator and towards thinking like an analytical professional. And it all starts by asking completely different questions. This slide right here, this is the whole ballgame. The amateur asks a fortune teller's question, where do I think it's going to go? It's just a guess. The professional, on the other hand, asks an investigator's questions. Okay, given what's already happened, how is the market behaving right now? It's all about response, not prediction. So what are those professional questions? Well, they're actually pretty simple, but they are so powerful. First, what was the story in Asia? Second, did London continue that move or did it reverse it? Third, is the US Open moving with that overnight trend or is it fighting against it? And then, the single most important question you can ask, in this first hour, right now, is the market accepting these new prices or is it flat out rejecting them? And this framework just puts it all together beautifully. You start with context. What happened in the sessions before you? Then you look at the conditioning. What expectation was built up overnight? And only then, after you've done that homework, do you look at the current price action to see how the market is responding. It's a structured, repeatable, logical process. And this just fundamentally changes the game. You stop trying to be a psychic, you stop trying to predict the future, and you start becoming a detective. You're piecing together the clues the market has already given you over the last 24 hours, so you can understand the behavior that's unfolding right in front of you. Because at the end of the day, this is the reality of the market. It's not some random walk down the street. It's a logical, if very complex, sequence of actions, reactions, and decisions made by different people all across the globe, each one inheriting the situation from the one before. So the market is constantly telling a story. It's having a 24-hour conversation about value, about risk, about expectation. And the only question left is, now that you know the language, are you listening?